Good morning. We will start the morning call. US markets were up 2% on Friday. Asian markets are up between 0.5 to 1% this morning amid the dip in dollar after bets on aggressive Fed interest rate hikes have cooled. For Europe, it is shaping up to be a tense week as Europe is awaiting to see if Russia resumes the flow of gas through the Nord Stream 1 pipeline on 21st of July, as it had shut it down for maintenance. If gas flows do not resume meaningfully, European gas prices will surge, prompting Germany and others to enact gas and power rationing with deep recession likely. But right now, the assumption is that gas flows will resume from Thursday. On a domestic front, after lagging behind the previous year's level, Kharif sowing has caught up and is up and is almost flattish on a year-on-year basis as on 15th of July. Pickup in monsoon rainfall in July 22 has led to an improvement in Kharif sowing. All India monsoon rainfall is now 13% above normal, which is a good sign. In the last couple of weeks, global macro indicators have stabilized with US 10-year bond yield stabilizing at around 2.9%, Brent crude oil at between $100 to $105 range, and the dollar index at around 108. I will now hand over the call to the technical team.
16 to 100. Very good morning, everyone. This is Ayush. I'll be covering the technical part for today. So looking from the global markets, Nifty is open on a positive note. It is going to be a gap up opening, and it is going to be a positive move in today's session. So Nifty has taken a strong bounce back from its 50 DMA in yesterday's trading session, and it is going to test its 100 DMA in the coming session, which is around 16,500 levels. For today, the immediate resistance is placed at 16,120. And if Nifty closes above that, further upside can be expected towards 16,200 to 16,280. Furthermore, if there's a selling on the upside, the immediate support for this index is for Nifty is placed at 15,970, followed by 15,900 levels. Moving on to the Bank Nifty has taken a resistance from its 100 DMA on the upside, and it made a swing high of 35,550 levels. And now in yesterday's session also, it has witnessed a slight selling, and there's an immediate support of its 50 DMA on the downside at around 34,230 levels. And immediate support for this index is currently placed at 34,500, followed by 34,250, and resistance for this index is placed at 35,270, followed by 35,500. Moving on to Nifty Financial Services, there's not much of a change in this index. It closed at 15,850 levels. The immediate resistance for this index is placed at 15,930, followed by 16,000. And if you witness a selling in this index, then 15,750, followed by 15,630 will be the support level. Godrej Property looks good at the current levels. It has taken a strong support of its 50 DMA and is on the verge of breakout. We can initiate a buy call for a target of 1,400 with a stop loss of 1,300 on the downside. That's all from my side. I request derivative guys to take the call forward.
Yeah, thank you, Ayush. See, on the derivative front, looking at the overall positions, one very good thing is the VIX falls further below the 18 levels. Now, this is a very positive sign because after almost 6 months, you are seeing, such VIX decrease. That does mean, now we can be up for a big move on the indices on for stocks as well on the upside. So that can be comforting. PCR has risen sharply, and that is good. It was below the 1 levels previously. Also, open interest, it witnessed some sort of covering of positions. So short covering was seen there. So all in all, the data is positive. Also, the 16,000 put has the highest open interest amongst puts now. That is also another positive. The base has shifted upwards from 15,500 to 16,000 levels. PCR is also above 1 at the 16,000 strike. So all in all, the data is positive. It should remain positive now going forward. We can see Nifty moving up towards the 16,250, 16,500 levels, which are the next resistance areas for the index. From the stock specific front, banking stocks are likely to see good amount of buying. Banking, lots of shorts are built into the system in the last few trading sessions, and they are likely to see good buying. While IT and metals, which had seen a lot of shorts and were coming down as well, we'll see good short covering action coming through. So look out for the same. Even oil and gas stocks, some of the stocks like HPCL, BPCL, which have had a lot of shorts and have fallen about 30-35% from the tops, they are likely to witness good buying action going forward. So that should be on the watch list. That's it from my side. I'd like to ask the fundamental team to take over, please.
On the results front, HDFC Bank result was in line with expectation. Overall, it was a stable quarter, although a sequential loan growth was at just 2%, but the year-on-year loan growth was at 22%. And bank is on track to keep growing at 20% year-on-year going forward as well. There was marginal deterioration in asset quality due to agri loans, which is seasonal in nature in every quarter one. Because of this, the gross NPA has increased 10 basis points to 1.28%, and slippage ratio increased to 2.1% versus normal rate of around 1.7%, which has been the last 5-year average. Because of this, stock may remain range bound in the near term, but we remain positive from long-term perspective. Federal Bank result was marginally above expectation. Slippages and credit cost remain comfortably low. Slippage remained at 1.2%, which is flattish sequentially, while credit cost came at annualized rate of just 44 basis points. So on slippage and credit cost front, Federal Bank has demonstrated one of the best performances since last few quarters, and even this quarter seems to be at similar. Loan growth also accelerated to a 12-quarter high of 16%. However, despite all this, the ROA remains at 1% level, mainly because of structurally lower NIM profile of the bank, which is at just 3.2%. And thus, we feel that bank is broadly fairly valued at one-time book value. For re-rating to happen, the bank would require to grow at 20% plus on advances and reduce its cost to income, as well as focus more on retail mix and improve its NIMs, which could take some time and not likely to happen immediately in the near term. So from a long-term perspective, we are bullish on Federal Bank. ICICI Prudential Life Insurance result was also in line with expectation. The APE grew by 25%, VNB grew by 32%, led by expansion in VNB margins to 31% from the earlier range of 29 to 30% that we saw in last few quarters. Margins improved mainly because of rising mix of annuity products and a decline in mix of group policies. Overall, we remain positive on ICICI Prudential Life Insurance. Thank you.
Good morning, everyone. Just Dial had posted broadly in line with expectation set of numbers for the quarter. Unearned revenue came at rupees 353 crores, which is up 4.5% Q on Q. Revenue for the quarter came in at 185 crore, which is up 11.4% QOQ. EBITDA margins came in at 4.5%. Adjusted PAT came at a loss of rupees 48.4 crore. PAT is lower due to loss of rupees 60 crore reported in other income. Share is trading at 17.8 times FY24 EPS. Den Network has posted declined set of numbers for the quarter. Share is trading at 11 times TTM EPS. L&T Technologies came up with its result on Friday, and the company has posted above expectation numbers for the quarter. CC QOQ revenue growth came at 4.7%, and EBIT margin came at 18.3%. The company has retained the USD revenue growth guidance of 13.5 to 15.5% for FY23, and management reconfirms a $1 billion run rate either in Q2 or Q3 of FY23. In Q2, the company will have headwinds from wage hikes that are effective July 22, which the company will try to offset through a combination of growth and operational efficiency, and aspires to maintain margin at 18% levels in medium term. Outlook is positive. Stock is trading at 24.2 times FY24 EPS. Wipro is to post results on Wednesday, and the company revenue growth is expected to be in line with the guided range of 1 to 3%. The company will have an organic growth of rising in this quarter. Margins are expected to be margins are expected to decline due to supply side pressures, travel cost. The key things to watch out for in the result would be the Q2 guidance, and if macros are impacting the demand in CY23. Thank you.
Good morning. On Friday, China reported its steel production numbers for the month of June. The export from China, which was around 4.5 to 5 million ton in previous months, has now increased to over 7.5 million ton in the last 2 months. As compared to India, the steel export, which was averaging at over 1.2 million ton, has come down to around 0.7 million ton. The reason behind this is the imposition of export duty in India. Global steel prices have fallen by 15%. However, as compared to Indian prices, which has declined sharply by around 20%, due to higher supply into local market post the export duty. However, the buyers are still reluctant to book high volumes. So all in all, what we are seeing is the increase in export from China and lower demand due to slowdown led by monetary tightening by various central banks is putting pressure on international steel prices. So this is neutral for the steel sector. On results front, Jindal Steel and Power reported above expectation set of numbers. Sales volume came at 1.74 million ton versus expectation of 1.71 million ton. EBITDA per ton grew by 14% sequentially on account of higher realization before the imposition of export tax and lower other expense. Other expense was reduced by a forex gain of rupees 466 crores. Management has guided of 50% coking coal requirement, which will be met by its captive sources from overseas mines, and has maintained its guidance of production and sales volume at 8.5 million ton and 8.2 million ton for FY23. Management expects to its export to be around 20% of total sales, where focus will be on exporting value-added products on which there is no duty. Going forward, realizations are expected to fall by 15 to 16% with pressure on steel prices. Also, weak demand in the near term will further lead to a fall in steel prices in the domestic market. The benefit of fall in iron ore and coking coal prices, which is now around 230 to 240 dollar per ton, will be seen in the coming quarters. Management remains committed to spend rupees 18,000 crore of capex over the next 3 to 4 years for its Angul greenfield plant, which will be met by internal accruals. We are neutral on Jindal Steel and Power. Apart from this, Sagar Cement is likely to report numbers on Wednesday, wherein sales volume is likely to increase by 2% sequentially on incremental capacity. However, due to lower cement prices in the southern region and higher coal and petcoke prices, its EBITDA per ton is likely to fall by rupees 20 to 25 per ton. Thank you.
Good morning. So Bharat Electronics announced its results. The result was ahead of expectation as the business environment and operations restored to pre-pandemic normalcy. The revenue came in at 3,100 crore versus an expectation of 2,098 crore, which grew by 50% on a sequential basis, but was higher by almost 90% on a YOY basis. EBITDA margin came in at 16.5%, which was in line with expectation, but was higher on a YOY basis from 3.8%. The order book at the end of the quarter was at rupees 55,333 crore, implying that new order intake in the quarter was quite weak at 1,250 crore, which was the weakest quarterly intake since December 2019 quarter. However, Bharat Electronics will regain and sustain double-digit revenue growth in FY23 based on strong order book position, which is at 55,000 crore, strong project lineups, normal operation without pandemic-induced disruptions, and easing of supply chains. The stock is trading at a PE of 18.5 times FY24 EPS. Thank you.
That's all from us. Thank you for attending. Have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.